More than one-fifth of Australian mortgage holders are considered at risk of missing repayments or otherwise struggling to get by as interest rate rises continue to bite. New Roy Morgan research this week showed 854,000 borrowers were at risk of mortgage stress in the 3 months to July. Watch the video above. Young people facing uphill battle with housing market. Watch the latest news on Channel 7 or stream for free on 7plus following 2 more rises to the cash rate. That number is now estimated to be about 942,000 people. Roy Morgan considers borrowers to be at risk of mortgage stress if their repayments are greater than a certain percentage of their household income, which varies according to income and spending. They're considered extremely at risk if even the interest-only portion of their loan is over a certain proportion of household income. The 854,000 borrowers in July considered to be at risk encompasses the 3 interest rate rises by the Reserve Bank since May. During the pandemic, the cash rate was paused at a record low 0.1%. But, since COVID-related measures including lockdowns have eased, the RBA has resumed adjusting the cash rate. It was first increased by 0.25% in May, before 4 consecutive rises of 0.5% brought it to 2.35%. Economists are predicting further rises as global factors, including the war in Ukraine, contribute to a higher cost of living. Roy Morgan's analysis suggests that, if the RBA lifts the cash rate by 0.5% in both October and November, 1.1 million Australians would be classified as being at risk of mortgage stress. That would be an increase of 246,000 since July. It would also be the most mortgage holders classified as at risk in almost a decade. Roy Morgan's CEO Michelle Levine said 171,000 people were currently considered at risk since last year's lockdown in NSW and Victoria. Of more concern is the rise in those mortgage holders considered extremely at risk, now estimated at 620,000, 14.1%, in September 2022, the highest since May 2019, before anyone had even heard of the coronavirus or COVID-19, Levine said. It's important to consider that interest rates are but one variable that determines whether a mortgage holder is considered at risk. The variable that has the largest impact on whether a borrower falls into the at-risk category is related to household income, which is directly related to employment. These figures suggest that as long as employment levels remain strong, the number of mortgage holders considered at risk will not increase to anywhere near the levels experienced during the global financial crisis in August 9, 2007, when well over 30% of mortgage holders were considered at risk, including a peak of 35.6% in May 2008. 3 of the Big Four banks are expecting a 0.5% increase to the cash rate on Tuesday. The outlier, the Commonwealth Bank, is predicting a 0.25% increase. If the majority is correct, the average Australian borrower would pay about $160 more per month on their repayments. Monthly repayments would increase by another $165, roughly, if another 0.5% increase was made in November. RBA Governor Philip Lowe earlier said there would be further hikes to the cash rate in 2022, but they would not be as severe as in recent months. The board expects to increase interest rates further over the months ahead, but it is not on a preset path, Lowe said. The size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for inflation and the labor market. The board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time.